Good night, whenever or wherever you're listening. Namaskaram to everyone. So let's today talk about exponential moving averages. So last time we discussed about simple moving averages. Simple moving averages are very simple, which actually takes the averages of the last. If your example, if you took for the last 10 days closing, it will take. But in exponential moving averages, the recent the last 3-4 days, it depends upon how the settings. I think I'll talk about the settings in trading view for an example. So you, while you trade, how much weightage you want to give for the recent data, it can be seen. I will just read this. Before that, let's see this exponential moving average. I'll read this and then I'll come to the disclaimer, and then we will come to the examples, flooded with examples. So this video is going to definitely change the way you look into the exponential moving averages along with the example. I can't believe I started trading after knowing this, and I have seen a lot much of difference in my trading style. So exponential moving average is a powerful technical analysis tool used to identify trends and smooth out the fluctuations. Earlier than smooth SMAs, they are more of an equal. EMAs assigns more weight to the recent data rather than the equal weight to the all the data what it's coming. So it is making more responsive to the current market conditions. So this is the disclaimer. Make sure you, whatever stock market investments or the examples what we are discussing, you consult with a professional or your personal financial planner. All these are educational purpose, and make sure you have your own professional advisor when you take in the positions. So as we have discussed in the earlier slide, the moving averages are basically gives a greater significance for the weight for the most recent data here, unlike the data moving averages SMAs, where it gives the equal weight to the all the data or all observations. EMA doesn't do that. If you see the examples here, I will also talk about an example where clearly EMA and SMA in the chart. EMA is orange. We will go to that part later. If you see here, it's this is EMA 9 thing volume wise. I'm sorry, SMA. I'm just showing this SMA part, so you will understand how it is going to come in the next slides. So exponential moving average explains response to fluctuations, weighted for recent data and identifying trade opportunities. Yes, be very easy. As I think in the earlier examples I have shown how the floating averages are, how you can change the average for each stock. As I have said, each underlying security has its own rhythm or own average. On the resistance side, on the average, on the support side, you have to identify it before you take something. You can clearly say we have taken EMA 9 and SMA 9 here. EMA 9 and SMA 9 may not have too much of difference here, but if you really want to take good trades out here based on EMA, you can see how it is behaving. There is a very little difference out here, but you can still see there is some difference where you can get the opportunity out of here. If I have to say simply here, if I have to take a short position, I would have taken short position somewhere around 420 odd rather than waiting till this time we're around 410. So that way I think there is a difference 413 here, but if you would have seen here, the difference is almost like 10-20 points difference is there. So technically EMA the recent data is going to reacting very fast. So if you are a trader or even for an investor for that matter to say nowadays, if you are keeping 200-day moving average or 100-day moving average, it all will change. So let's go through this one more time. The formula is this. I think in earlier formulas, in SMS formula is everything day 1, day 2, day 3, day 4 divided by how many number of days, but here it's a value of today into smoothing by 1 plus days and yesterday into 1 minus. So you can see this theory part, and you can also see the same thing in 50-day moving average EMA, simple moving average for 50 days and simple exponential moving average for 50 days for SIPLA. At a week level, you can clearly see at this level there is a very good movement happening. This is in October, this sometime in July. This is during the corona time. I think the stocks have fallen too rapidly, but then they started moving when only one leg at a 50 level it has taken below this one, and after that it again moved up and it never came down back. So I would definitely think EMA 50 can be considered for not like all the stocks, but at least a weekly level EMA 50 for market capitalization, high market capitalization stocks you can consider. You can also see here there is a good volume out here on this day. Clearly shows some hands might have been changed here when compared to the overall thing. So volumes also, we'll talk in volumes class, but let's focus on this one. If you see here, EMA is in the orange color, SMA is in the blue color. So if you really want to take the trade, I think it will give, sometimes it is a good thing, 4-5% difference also you can say based on that price movement. Analyzing Ciplas chart, if you analyze the Ciplas chart, you can clearly see how EMA is considering the recent data rather than the past data continuously compared with the simple moving average. So if it crosses trading rules or trading strategy or setups is simple, go when it is coming from the, do not go just like that, it is coming from the top, so you should not enter into the trade here. If since it is coming from the bottom, you should enter the trade. This is the most important thing people forget to do in SMAs. Most traders and most coaches or most trainers forget to say you have to take the trade here. In this case also, you should not take the trades out here. Important thing, you should take the trades out here because the stock started moving from the bottom. This is the very important thing. You buy when the stock is coming from the down and crosses the EMA 50 and hold the position, when gone, and sell when it crosses down. It's the same example I will tell here. You buy here somewhere around 450 odd and it crossed below this 11 at 1100, yeah, somewhere around 1100, 100% profit in a matter of couple of years. The same thing would happen. You can think, we may taking an examples of corona time, but COVID time, if you escape also in 23 July, if you pick it up, it's around somewhere around 900, I say, maybe 900 odd. But you can always see in a matter of 1.5 year, you still have 80% or 70% return. 1 year 70% is a good return, just considering that if you are having good portfolio. I will talk about the buy signals, how it has given here, and how the sell signals here. If you see here, the buy has come in somewhere in July 2022. You just take 1 day Cipla thing, and then the sell came here. The chart is a most weekly chart. One time you come in, you exit at the weekly levels, but if you are looking for multiple opportunities, day chart also makes sense. Sell here and again you buy here because this is where the EMA 50 and smoothing is at 9. So you cross here and it went up to here. There is a small noise out here, zigzag, but we will talk about how to, maybe I'll talk right away. You have to exit the stock when the candle closes the previous candle low. So it is good always to have the previous candles low running when it is only happens when the stock is on the line. So those 2-3 days you have to look at the system. If you do not want to look at the system, if you are looking very long term, I would definitely suggest the weekly thing here rather than going at even at a daily level. The same thing at a buy signal, the sell signal. I will talk about the next slides how you can get how you can make the percentage returns, all those things. But if you see here, simple, buy at 953, sell at 102, you made a good money, 139 rupees, and to 941 you buy it, EMA crossed at the next long signal, you sell 241 rupees here. These are not like small profits, these are very good percentage profit, 20%, 30% profits. If you see here, 15% profit here on the first thing, and 25% here, and 18% here. So every time there is a signal happening here, you have an opportunity to make money out here. So trade summary is that make sure you and your trades have that kind of a trade because an annualized basis, these will be very good numbers. So buy signals, when the crossover happens, maybe I'll show it you again. The buy signal, the cross happens, so this is the buy signal, and sell signal when it goes down, this is the sell signal, and then the staying in the course, just running onto it, continuing since there is no buy or sell signal. If you're buying, just hold on to monitoring the positions. Okay, crossover system examples. I think I have showed you the crossover thing. I'll in the 19 day, 21 day, everyone have their own I don't know how to say, the crossover thing, as I said, every system, every stock or underlying has its own thing. But if you see just an example of 50 and 100-day EMA cross here, so some kind of a fake signal here, as I said, you have to look at the candles. But if you see here, the entry has happened here, and almost like 105 rupees you took Bank of Baroda, and the next thing is 252 in a matter of 1.5 year, 100% return just based on the EMA crossover. So you have to be, this is a bearish crossover. I'm not talking about 300, almost like 200% from 100 rupees to 300 is 300%. I'm not talking about that. I'm just talking about 150% return at 250. So 200 rather than 150% return with classic EMA crossover setup. Yeah, longer time frames, fewer signals. I think we have seen the longer time frames like weekly and the monthly will give you fewer signals, but solid investment opportunities. 25 into 50 EMA crossover, 25 period, 50 period. Again, like here we have taken 50 and 100. It all depends stock to stock. You have to identify intraday crossover opportunities. If you are looking at an intraday opportunities, it is good. I think some traders look at hourly and 30 minutes, but some look at 15 minutes and 5 minutes interview, whatever suits to your trading style, and keep your nerves cool. There is a saying in Market Wizards, the best money is made when you are able to sit as calm as possible. So patience is important. So even if you're doing intraday and if you have that patience, I would recommend you take that 5 minutes and 15 minutes SMA and then EMA, and then you can take the trades. Importance of EMA, all practical purposes, since exponential moving averages is more weighted on the recent data and SMA not, I would consider the EMA process. Scaling data by newness, so this is one good thing. Advantages of when compared to SMA, EMA has more advantages because recent data consideration is trend identification. Compared to SMA, you can easily identify the trend where swing it's happening. Since some scenarios you might the difference between SMA and EMA could be more than 5 to 10%. So make sure you have that thing. Customized strategies, collaborative insights where you can have a continuous improvement on things, because every stock has its own momentum averages thing as its DNA. As everyone have a unique DNA, every stock has its own unique average. So find out that for a better trades. I think thank you. If you want to know about the more mentoring, mastering, about the trading coach thing, or join the mentorship program, you can click the link below, or you can connect with me on this LinkedIn message. I think this information, I think I learned from many people, many teachers, many gurus, if I had to say. One thing I can say is the best challenge or the biggest challenge you will facing is identifying the trade opportunities, but EMA actually gives you those opportunities. If you see here, you can see that opportunities out here. So take those opportunities and mint money. I think in the what else we can do is in the next paid class session, we will talk about more of an example sessions, how we can set up the EMA part. So that will enable you to become a better trader. That setups part I will also show you the scrolling, how the DNA for each stock. So important thing is, if you understand the DNA of the stock, whatever stock you are trading, or the bunch or group of stocks you're saying, this is what many people will not say, many not. I think almost I attended 25 people, only one person said that technique one teacher or one guru said that technique, or 24 didn't say that, and I'll share that technique in that example session. So watch that session, so it will make much of difference. Once again, thanks for your time.